Welcome to Module 5, Grand Opening Plan and Post-Opening. Today, we are covering Lesson 5.3, Payroll SOP Execution and First Pay Cycle Audit. When we examine this breakdown of a property's operating expenditures, one category immediately dwarfs the rest. Payroll is the single largest expense for any hotel. Managing an expenditure of this scale is classified as a high-risk operational area. It requires a framework executed with absolute precision and strict compliance. The defining moment for this framework is the first pay cycle. This initial run acts as the definitive stress test for the integration between your Human Resources Information System, the HRIS, and your finance architecture. A failure to pay staff accurately or on time during this run carries severe internal consequences, immediately compromising staff morale. Externally, these failures invite costly legal disputes and regulatory penalties. To prevent these errors, properties execute the end-to-end payroll SOP. This provides a strict, linear defense mechanism that tracks every data point from the initial time punch all the way through to the final bank transfer. Completing this initial payroll run correctly serves as the definitive validation of the hotel's entire financial and HR control architecture. The end-to-end SOP begins here, with data verification for time and attendance. This segment enforces a mandatory operational requirement. All department heads must electronically approve their staff's time and attendance records. This departmental approval is bound to a strict, non-negotiable deadline to ensure the cycle stays on schedule. Once approved, the finance department takes custody of the data to conduct a secondary audit. The finance team scans specifically for anomalies, intentionally isolating instances of unauthorized overtime. They also track down scheduling discrepancies and missed punches, separating them from the main file. This rigorous audit acts as a necessary filter. It ensures only verified information passes through before any data is extracted for actual payroll processing. Applying this multi-layered verification prevents raw operational errors from corrupting the financial pipeline early in the chronological cycle. Once the data is clean, we move to the second segment of the SOP, the gross to net calculation audit. Here, the automated engine of the HRIS processes the approved data to calculate the initial gross pay for every employee. From this initial block, the system automatically deducts mandatory statutory withholdings, specifically pulling out income taxes. It follows up with other mandatory government withholdings, routing funds for Social Security contributions. Finally, it removes hotel-specific benefits and any voluntary employee deductions. These sequential, automated deductions result in the final net pay figure that will actually be distributed to the staff. While the system handles the calculation, a critical manual control disrupts this automation, mandated directly by the Director of Finance. The DOF requires a manual spot check audit of several random employee records. This spot check verifies the underlying HRIS tax calculation accuracy before the entire batch is allowed to be finalized. Pairing these automated calculations with targeted manual spot checks creates an interlocking defense against catastrophic system-wide software math errors. With the batch finalized, we advance to the third segment, GL posting and fund transfer. The standard operating procedure strictly dictates that these two major financial actions must occur simultaneously. On the banking side, we execute the fund transfer. This is the electronic instructions sent to release the physical cash. These operational funds must move strictly to a dedicated ring-fenced payroll bank account. They are never distributed directly from general operating accounts. At the exact same time, looking at the general ledger posting process within the accounting system, the system automatically posts the total payroll liability to the ledger, and it records the corresponding cash reduction to balance the transaction. There is an absolute requirement for this expense to hit the correct, specific departmental cost centers. Inaccurate cost center allocation artificially distorts departmental profitability metrics and ruins budgeting forecasts. Executing these two major actions simultaneously ensures that the physical cash flow perfectly mirrors the accounting liability in real time. This brings us to the final post-execution step, the first pay cycle audit. The chief accountant is the operational leader responsible for driving this detailed review. This audit is a tripartite reconciliation designed to verify absolute accuracy of the finalized payroll batch. The first leg pulls the total payroll expense accurately posted to the general ledger. The second leg verifies actual funds transferred out of the bank. The rule here is strict. The GL expense and the physical bank transfer must reconcile perfectly down to the cent. The third and final leg accounts for all statutory deductions. The chief accountant must verify they were correctly segregated from net pay. They must confirm these funds are securely earmarked and ready for mandated payment to relevant tax authorities. Failing this specific tripartite audit indicates a structural system flaw in the HRIS and finance integration, requiring immediate remediation. Accuracy in payroll processing is a non-negotiable requirement for basic operational stability. Executing the first pay cycle audit definitively proves that the hotel's largest financial commitment is structurally sound and fully compliant from day one.